All right, good morning everyone and welcome to Market Vibes for March 25th. Please see the source below as I'm not responsible for the composition of this research, and remember that nothing on this channel is financial advice. If you are finding the channel for the first time, be sure to like the video, subscribe to the channel, and hit the bell so that you're notified when we go live, which is every day the market is open. All right, so let's take a look. So looking at the Suez Canal fiasco, still stuck. The ship that has completely blocked the Suez Canal remains stuck in place. While operations to free the channel continue today, the best chance to move the vessel may not come until Sunday or Monday when those tides are the highest. The blockage is halting 9.6 billion a day of traffic, and the knock-on effects of closing one of the world's most important transit points is likely to worsen for ships carrying everything from crude oil to cement to live animals. Looking into the AstraZeneca vaccine saga, they did report a slightly lower efficacy rate for its vaccine after being criticized for using outdated information. The company says the efficacy is 76%, down from the earlier 79% that it claimed originally. A research group preparing to make public a paper criticizing the trial data from Russia's Sputnik 5 vaccine. There was a little bit of good news on the vaccine front with the EU and UK signaling an easing of tensions over supplies. Okay, so looking at weekly jobless claims, that is coming out today, about 5 minutes from the time of this recording. Economists expecting 730,000 new filings and a drop in continuing claims to 4 million. This is unlikely to change the wider outlook for the labor market or Fed policy. One thing the market will certainly be keeping an eye on today is the auction of $62 billion worth of 7-year notes at 1 p.m. after last month's disastrous sale of that tenor triggered a major sell-off in treasuries. This says markets mixed. I think the markets are not mixed and pretty clear, but we'll talk about that in a second. The upbeat assessment for the U.S. economy given by Treasury Secretary Janet Yellen and Fed Chair Jerome Powell is helping risk appetite. Not sure I agree with that either. Right here, they say that SP 500 futures pointed to a gain at the open. Maybe they looked at the SP 500 futures before I did, but at the time of me getting ready to go live, I would not agree with this, but we'll talk about that in a second. Coming up, so what to watch for today, the third reading of U.S. fourth quarter GDP, accompanies the claims data coming out in a few minutes here. Also, the presidents of New York, Atlanta, San Francisco, and Chicago Federal Reserve Banks are all speaking later today. And the heads of Facebook, Alphabet Inc.'s Google and Twitter will appear before a House panel about the spread of false information on their platforms. Also, President Joe Biden holds his first press conference. Just a few more side notes about some things that caught the author's eye the last 24 hours. Global tourism looking shaky with herd immunity a distant dream. U.S. oil companies lag far behind greener European rivals. China's stocks 15% rout shows what happens when stimulus ends. BOE's chief economist says rip-roaring recovery is possible. H&M, Nike face boycotts in China as Xinjiang becomes wedge issue. There is possible, I think this one's just kind of funny, possible evidence for dark matter subhalos in nearby star cluster. I did go ahead and include this little snippet about what whoever Joe over at Bloomberg is interested in this morning. Mostly talking about the Suez Canal. You can pause the video and read this if you'd like, but what I took from it was that the big winners in this current moment are the smaller, faster cargo ships, which are used by more nimble players. So the crisis in Suez is partly just fluke, but it's also perfectly emblematic of a broader problem of an industry that bet big on gigantic ships that are now contributing to logistical challenges all around the world. Okay, taking a look at index funds first. Again, these are just some of the quick metrics that I use to get a gauge for what the markets are doing before my trading day starts. Yesterday was ugly. Yesterday was big red day for a lot of stocks and index funds. So biggest losses definitely continued in the Russell 2000. So that is going to be your smaller, mostly tech company startups. So kind of a subset of the SP 500 can tell you what the difference between the 500 largest companies and then these kind of smaller cap companies. So those getting hit very hard. NASDAQ down about 2% as well. The Bitcoin index down 1.27%. I find that interesting that just kind of across the board, everything's going down on a daily time frame. So that makes me think that people are really just holding cash putting money in savings accounts. Just a lot of fear right now. Dow almost even on the day, almost a win for the Dow considering. SP 500 lost about 0.5%, and the FTSE 100 down about 1%. If we look at the 1 month, the Nasdaq has erased and gone negative 1.20% on a monthly time frame. The FTSE almost neutral on the month. The Dow still up 3%, SP 500 up 1.5% on the month, and the Bitcoin index about 20%. Yearly time frames as well. Everything's still green on the 1 year time frame. Not a huge surprise there. So looking at the futures again, right before I went live, these are the most updated numbers. So the Dow futures down about 0.38%, SP 500 similar 0.35% down, the Nasdaq down about 0.42%, and the FTSE 100 down 1.18%. So European market getting hit a little bit harder than American markets. Here's some commodities. Notably, oil took another huge hit. Gold and corn also down fairly significantly for those two commodities. Currencies here, if you care to stay up to date on currencies, there they are. Rates, again, largely unchanged. This is the current Fed rates. These are the target Fed rates, prime mortgage rates, and unemployment rates. These are probably going to change in a little bit here, hopefully for the better. And bonds, the US 10-year bond is the only one I really keep an eye on for the purposes of this quick morning gauge of the market. So the 10-year Treasury yield down about 0.51% on the day, which is a good thing. It means yields came down on the month, up about 7.73 basis points. Excuse me, this is basis points, not percent. And on the year, up about 73 points. Again, remember a year ago was when we started pumping these numbers down to historical lows here. Daily outlook, you'll know if you watch yesterday's market vibes. I was pretty bullish on the day. I thought there was a lot of positive catalysts coming. I was fairly confident that the Fed and Secretary hearings would provide good news. I actually think they did, but sometimes it doesn't matter. The markets responded very bearishly, and based on futures and what I'm seeing, unless a few big things that are on this watch list for events like Joe Biden's press conference, these central bank presidents, it's going to take another catalyst to get back up into a bullish sentiment for the day. Whoever this guy is says a rip-roaring recovery is possible. I do agree. It's possible. I wouldn't say it's necessarily likely. Again, I don't see any particular reason for what's happening right now to turn into a crash. I can certainly see a correction or definitely a pullback being likely and arguably necessary. I don't see any reason for a widespread market crash. That's just me personally. So I do have a daily bearish outlook, possibly a weekly bearish outlook as well for the month. So the next 30 days looking forward, I do remain bullish overall. So that's what I got for the market vibes for this morning. So I'm going to end this video. We'll get this uploaded and we'll see you in the live stream in about 30 minutes here.